The Aquest Podcast, Funds Industry Conversations.
Hello, podcast listeners, and welcome to this episode of the Aquest Podcast with me, Danny Lawler. If you're new to the podcast, do make sure to hit the subscribe button. In this episode, we're delving into the world of blockchain, and I'm delighted to be joined by Mauricio Magaldi of 11FS, who is, despite his own modesty, a blockchain expert. We chat after he forgives me for butchering his name. We do chat about blockchain, some of the very interesting use cases that he's seen at the moment. We also chat about the potential for the regulation of blockchain-related financial services and how regulators might think differently about that to be more innovative and effective. We also chat about DeFi, or distributed finance. We chat about Tradfi, traditional finance, and what it is that those firms should be thinking about as they pick up the phone to a firm like 11FS, where Mauricio works. They try and guide people and firms through adoption of these types of technologies. He does end with a rather dire warning that if you're a financial services company and not thinking or engaging or working on crypto and blockchain related matters, you won't exist in 5 to 10 years. So with that in mind, let's get on with the podcast.
The Aquest Podcast, Funds Industry Conversations.
Hello, podcast listeners, and welcome to the Aquest Podcast with me, Danny Lawler. I'm delighted on this episode to be joined by Mauricio Magaldi. Have I got that right, Mauricio? Oh my God, I can't start the podcast and not get... Magaldi. Oh, I apologize profusely. Now, Mauricio, you're based in São Paulo at the moment in Brazil.
That's correct.
But it's early in the morning.
Well, it's 9 a.m., so it's a mellow time to chat about everything blockchain.
Good stuff. Because you do work for 11FS, which are they based in London, or is that just one of their centers?
Yeah, they're based in London. It's a UK-based company. They're global. They have clients all over the place, but headquartered in London.
I do want to chat about 11FS, and I mostly want to chat about blockchain because a little birdie told me that you are very clever, a very, very clever little boy when it comes to the blockchain world.
Well, I'm super curious about it. I wouldn't say I'm an expert, but I've been studying the space for quite some time now. First time I ran into anything related was the Bitcoin paper back in 2014. I thought it was beautifully written. I wanted to understand more, but then 2014 was a time where I was working at a bank, and back then Bitcoin wasn't seen as a desirable asset to be had, so we couldn't actually hold any of that. And that went long. I mean, that culture in banks went on until I think 2019. So I actually started working directly with blockchain back in 2016-17 when I had the opportunity to lead the IBM blockchain services in Latin America. So we developed a lot of enterprise projects. That was the focus of IBM at the time, mostly using the Hyperledger Fabric protocol, which is one of the first blockchain protocols that were created and developed to be used by corporations. So it's not of public record. It's a private permission type of protocol. But I always kept my eyes on the broader crypto space, continuously studying, understanding what were the trends, what technology looked like, and what were the use cases. I'm a real sucker for use cases. I think they portray better than anything else, better than reading anything, seeing that piece of technology in action, solving real world problems is, I think, the beauty of it. And that's why I just keep studying. And when I left IBM in 2019, I did want to continue to be in touch with the blockchain community. Brazil has a number of great people involved in digital assets, involved in the technology aspect, more recently in tokenization. And I just wanted to be in touch with all of these folks. And I started looking for like educational resources that I could consume while in transit. In São Paulo, we're famous for the traffic. There's a lot of...
It's true.
Yeah, if you've ever been to Sao Paulo and you haven't been stuck in traffic, have you really been to Sao Paulo, I'd say? So yeah, and podcast is a format that I love. And I, browsed around for a podcast that would be like educational in terms of explaining to me, what, use cases were being tackled. And I couldn't find any in Portuguese. And the ones that I found in English were podcasts that were sponsored or owned by technology corporations. And I felt that it would be a little bit too biased for my education. So I went on into to do a panel in an event. And at the end of the panel, they asked me to actually join a podcast recording. And I felt that, well, this seems simple. I've been doing, I have a band for over 25 years. We've been in studio for, a good chunk of that. And I know my way around audio. And I said, you know what, this might be easier to do than what I thought. I'm already studying the subject. Why not, if I couldn't find any sources from what I wanted, why not put together my own thing, right? So I just jumped in on the opportunity. I found this one app that does the recording, the sound bites, the editing, the publishing, and it's on your cell phone. So I started off recording from the mic on my cell phone in my car at 7 a.m. in the morning during the weekends, because the car had a better acoustics than what I could get anywhere in my house. And then it just picked up, and I've done, every weekend since December 2019, some form of digest. It started off in Portuguese, and after a year of getting people asking me to do that in English, so I started doing that in English as well.
Yeah.
So I do 2 episodes every weekend. One is in Portuguese, the other one is in English. The topics are the same. I just record them like one after the other, and off they go. But one thing that I think is the most important aspect of this community is that if you're willing to learn in public, the community will reward you. And the way that the community has given back to me is that I've now had 70 interviews. I call them the block talks. And I brought people from all over the world, and they are willing to, spend 30, 45, 1 hour with me talking about what they're doing. And that's awesome. And yeah. I'm super thankful. And the amount of things that I get from doing the podcast is in no measure comparable to things that I can offer through the podcast. So I'm super thankful for that.
Give us the name of your podcast, Mauricio.
Yeah, name dropping. So I'm going to plug
Absolutely.
this. It's the Block Drops podcast, and you can find it on Spotify, Anchor, Castbox, Apple, Google, so all of the major platforms.
It's good. It's a nice kind of a digestible update on, I know this week's was on the Cavaliers in America with their NFTs for Locker Room, Nintendo Verse, and this kind of stuff. So it's pretty well done.
Thank you.
Your background, Mauricio, you mentioned that when you started to get interested around 2014, you were in banking. Are you a kind of an engineer, software techie kind of guy? Or are you worse than that?
Well, I'm a trained engineer. In Brazil, we have this career in engineering called production engineering, which is very like industrial engineering per se. It's a good chunk of like business management plus engineering on the side. So it's a good mix of skills. But I've never been an engineer, like a practicing engineer. So all the engineers out there, I'm sorry, I don't really represent the category. But I've, since my first job out of school, I was in some form related with financial services. I was a COBOL developer early on. Then I became a project manager. Then I became a program manager as I was moving towards different banks and different companies. And then finally around 2005, I guess, or 6, I was offered a job as a transformation program manager at a very large US bank. right on the cusp before the crisis. So we had a big project, transformation project in finance, bunch of like data acquisition, cleanup, data quality, data governance, all that good like chief data officer type work. Then the crisis hit. It was a very interesting period, scary one. Don't recommend it. But yeah, then I spent most of my time doing like big transformational work for international banks here in Brazil. Had a good exposure to the rest of the region, like Mexico, Argentina, Uruguay, Florida, if you will. Also, so yeah, good rundown on banking in multiple sectors: commercial banking, private banking, retail, wealth management. So there's I had a good like very wide exposure to the business side of things while doing transformational work for multiple of these companies. So yeah, very fortunate to have been exposed to this in throughout my career. And then it came to the point where that skill set and experience merged with the curiosity and the things that I do with blockchain and crypto kind of merged together into this weird concoction that I now am able to use, right?
And did it become, Mauricio, that as you worked on transformational projects within financial services institutions, and you happen to know and learn more about blockchain, that blockchain became a tool that you could use in those transformations?
Well, it's still an emerging industry, right? I think that Web3, crypto, metaverse, all these buzzwords that we're seeing now hitting mainstream media, these have been cooking for 5 years now, right? So I think it's approaching mainstream, and I think one of the critical aspects of handling this novelty is understanding that they go beyond the hype, right? They have to be tackled for what they are. These are infrastructure technologies, and the same way you don't, fool around with your telecom infrastructure, you shouldn't be fooling around with your data infrastructure, which is exactly what blockchains are, right? So I think there's a degree of seriousness that the hype sort of subtracts from the conversations. But I feel that little by little, as we speak with the market, we're seeing more robust and like rational approaches to the use of these new technologies rather than just speculation on the price of the underlying native asset of a given blockchain. So I think that this is a more mature conversation. It's not widespread yet. I think the interest is high, but I think the adoption is still lagging. Exactly because I think people get tied up on the hype instead of tackling this where they are. So and I'm here to help.
Yeah. What about use cases, Mauricio? Because as you mentioned earlier on, one thing reading, but to walk through an actual use case can be a really powerful learning tool. A lot of us are trying to learn our way through blockchain and understand better what the possibilities are. Have you got any good use cases you can throw in our direction?
So I think blockchains in general, they sort of inaugurate a few of like new primitives for the industries, right? One is it changes the way ownership is performed, because then it's the record on the blockchain is distributed. It's accessible to whoever has the access to see it, and then you can digitally prove an ownership in ways that were impossible before. So on a blockchain, you can't do copy paste, so you can't multiply the digital asset, as you will, because it's not how this thing works. So I think that sole primitive opens up, an avenue of different use cases. In the enterprise world, it is very, I call it a classic use case for blockchain, which is traceability. Traceability of any kind. You can trace from a pack of broccoli to, a tray of, tomahawk steaks, to a container, to an airplane, to airplane parts, and make sense of the logistics of everything that's involved and the financial counterpart of those assets as they go, about their journeys throughout the world. So it also helps bridge a number of industries. and facilitate what we call these sort of self-liquidating assets. If you have that on-chain, then the financial counterpart is easily resolved within the blockchain itself. So we're seeing a lot of efficiencies being captured by the enterprise world in that regard, but that is just one type of use case, right? When we reach out further into, say, what we call the public blockchains, such as Bitcoin, Ethereum, Solana, Avalanche, Cosmos, etc., what we're seeing is that we're financializing every relationship, and that gets recorded in a public ledger that everyone can see. So the degree of transparency, and on the other hand, the degree of privacy that gets thrown out is also something that we're learning how to manage, right, in this new environment.
And in so practical terms, Mauricio, when you think about supply chain blockchain for, let's say it's for transparency purposes, especially. So you want to know that your clothes have been made by people who are in decent working conditions, or that your food has come from sources that are safe and sound.
That's correct. So the concept of transparency in the use of blockchain is that your supply chain can see the data related to these events as they happen. So decisions can be made in a much shorter time period, because as the events get recorded on the blockchain by the participants of that supply chain, everyone that has a part to play down the line can prepare themselves to do so. So it's not like you're getting a truck full of frozen goods that are now melted because there was a problem with the temperature of the truck. If that thermometer is attached to a sensor that gets into the blockchain and it records a temperature that's higher than the accepted one, that truck will never make it to your dock, because then in terms of the logistics, the data is now available, and a bot or even the logistics operator can just say, call the truck driver and say, hey, your load is compromised. Just return to the warehouse. We're going to send another truck. And at the same time, the person who's expecting the truck on the dock knows that the truck's not going to arrive at the given time, and that a new truck is going to be sent with proper temperature. So all of these efficiencies are now transparent, meaning everyone that's involved in that process can see what's happening in near real time and make educated decisions, informed decisions as to what has to be done to capture those efficiencies as the processes happen. So this unlocks a wealth of efficiencies in industries that are mostly ridden with paperwork. So when you digitize the whole paper trail of processes like this, you get a timeliness in decision-making that wasn't possible before.
Forgive my complete ignorance here, Mauricio, but I'm assuming, so let me see, somebody's selling me a bale of organic cotton, or, proper, traceable coffee beans or something like that. The transaction where the person who I've bought it from, how they acquired it, assuming it's not the farmer, that's recorded in the blockchain as well. So I can see, well, you got that from there, and I know that source is organic cotton, or I know that source is coffee beans that are sustainably grown. Is that how it works? That each link of the chain adds their piece to how they acquired what they got, so that you could trace it back to the farm?
So this is another use case which is similar to traceability, but not quite so. This is provenance, right? Provenance means that I can see on a distributed ledger the information of where the goods that I'm buying came from, what process was performed with that, and which is the confirmation of the origin. So it's like if you buy, say, a fancy bottle of wine from a winery in France, for instance. Well, if you're buying this from a distributor, how do you know that the wine that's in there is the wine that you're buying the bottle for, right? So there's a way for everyone to record what happens with the goods, that when the buyer goes and checks, say there's a QR code, and I check where that bottle came from, if it's not coming from the proper origin that I'm used to buying, that I can just not buy that. But if it is coming from the winery that I'm very interested about, then I can even buy it for a premium, because I know exactly with the proven data set where it came from. That's why we say this is a provenance use case.
And so when you think about financial services, Mauricio, and use cases there, what are the ones that you've seen or one that you've seen quite recently you think, this is a real advancement from where we've been?
In financial services, I think the most disruptive thing we're seeing right now is what we call DeFi, which is decentralized finance, which is in its first instance is mimicking financial products that we have from banks, but doing that in a decentralized infrastructure. So you don't have to go to a bank to take a loan. You can go to a DeFi protocol and put in your cryptocurrencies as a collateral, and then borrow other types of cryptocurrencies to do whatever the business you want to do. So it's very interesting because now we have this immense infrastructure that the banks have, say, to provide a loan that can now be performed with, just, a piece of code that's running on top of a blockchain, which is what we call the smart contracts, right? So smart contracts are programmable pieces of code that you can put on top of a blockchain, and it's going to manage the assets, the digital assets that are running on that blockchain to specific processes. So in the DeFi, you can lend your money. So you provide liquidity to these types of DeFi protocols. And whoever wants to borrow that can go to the other end of the protocol and say, I want to borrow cryptocurrencies from your protocol to do something else. And we're seeing even derivatives now emerge, multiple different types of derivatives, types of insurance that would insure some of these new financial products within the blockchain. So there's the DeFi insurance as well. So there's a wealth of innovation being created in the DeFi space, because now it's just writing the code, managing a few of the characteristics of that product within the blockchain, and you can offer for a much better rate of return for your users than what the bank would do, because there are less intermediaries, there's less people working on it, and you can just have at some points you can just have your day-to-day savings being provided by an internet protocol such as the DeFi protocol sorts, with almost no human interference. That's why it's becoming really common to say that crypto is enabling a passive income, because if you have some capital in crypto, you can provide liquidity to these protocols and get an annual return in crypto to back that up.
With security in the meantime.
More than that, you can also buy insurance on top of that to secure that if there's any problem with the DeFi protocol, you won't lose all of your gains, right? Yeah.
And I guess you get asked all the time, Mauricio, about the pace of adoption, the pace of change, and I feel this might be leading us into 11FS. But what's your sense for the pace of change and adoption, and how that's likely to play out over the next few years?
You'll hear people say this a lot in cryptos. We're early. Enter now, we're early. And I feel we're early. I think that for some spaces within the industry, we are approaching like 94, 95 as compared with the previous wave of the internet. But I think what's happening is because there's an insource of venture capital in this industry. Last year alone, I think it was close to $34 billion were invested from venture capital in the industry. What we're going to see is a number of business experimenting with potential new business models. That doesn't mean that they're all going to be good. That doesn't mean that all of them are going to succeed or be sustainable. But the degree of experimentation that I'm seeing, and because most of these things are open source, is like I've never seen before. The amount of things that are being invented every week. I run the podcast and I choose like the top 3 pieces of news to comment on. It's increasingly hard to choose just 3 of them because there's so much innovation, like partnerships. We're starting to see the emergence of the DAOs, DAO. DAOs are the decentralized autonomous organizations. These are new forms of corporations that are emerging in the space. We don't know how they are going to be sustainable. It's super early and it's all experimenting. So the beauty of everything is that the amount of innovation is probably unheard of, but we don't have enough adoption yet. So there's an imbalance between what gets created and how much of that gets adopted. So we are that early in the industry. And when I say adoption, it's not the 100 million people on the internet that are doing this because they're early adopters. Adoption means we need to onboard the next billion people into this industry. How do we do that with the current shortcomings? How do we do that with the current lack of regulatory framework? How do we do that when the UX is terrible, right? So I think, and I wrote this on a Cointelegraph article recently, there's 3 things that I think prevent massive adoption in Web3. One is the UX, right? If you think about the UX as not only the websites or the screens, but the overall experience, it's dreadful, right? You have to have wallets. Sometimes you have to have more than one wallet. You have to differentiate between what is a hot wallet and a cold wallet. The risks of being your own bank in terms of security, it's not conducive. If you're not really curious, there's very little incentive for you to onboard this new industry. So I think this is one massive hurdle for increased adoption. That doesn't put any strain on innovation. That's the beauty of these things. People continue to innovate, but the adoption will soar when we fix the UX. And the second thing is, I call it regulatory integration. I don't think that regulation express what I feel would be the unlock for adoption. I call it regulatory integration because this technology now allows regulators to actually write the code that they want the market to follow. It's not like I'm writing the code on a piece of paper, and if you don't follow that, I will then maybe find out, and maybe I'll go after you. It's now I can write the law into code that get processed and run on top of the blockchain. That's exactly what Bitcoin did. The monetary policy is written on the code, and it's immutable. So the beauty of this is that once regulators realize that they have this huge power in their hands now, they can start to participate in enabling regulated innovation. And in my mind, the first jurisdiction that does it well will attract an amount of resources that is going to create a new geopolitical battleground. So I'm hoping that a regulator has this epiphany that says, wow, I'm going to write my own software development kit for this industry that I regulate. And if you want to be in crypto and regulate it, you can use this SDK to actually write your own applications and be in line with the regulator in all aspects. So I think this creates not only this innovation opportunity, but think about the regulators, right? Now they are on chain, they're preventing bad things from happening, and they can monitor things real time instead of having to wait 45 days to see what transactions were, skewed or off the mark.
I think there's a whole podcast on that, Mauricio. I love it.
But I know. Yeah, there's a lot to unpack. I'm just saying that this has to be in someone's mind right now, because it's a unique opportunity that only blockchains can give the regulators. And the third thing that I think will unlock massive adoption, I think is a mix between information and regulation, because I don't think the education piece at all in most of the world is, we don't have digital literacy, we don't have financial literacy, and blockchain merges these two. And we need to have that degree of literacy if we want the world to adopt these new pieces of technology in their day-to-day, massively adopt, right? Otherwise, it's just going to be niche. And one thing that I would love this new industry to prevent is the continuation or exacerbation of the socioeconomic gap. I think we need to be more inclusive. And I think that crypto needs to be for everybody. So there's a good chunk of the mission of the Web3 ethos, which is to make this more inclusive for all. And we have yet to reach that point. So I don't know how we're going to solve this, but it's a massive hurdle we have to overcome.
Yeah, and I know, Mauricio, obviously you're with 11FS, and one of your tasks is to assist Tradfi in not being Tradfi or being transforming in the way that's going to work for them. I just wondered, when Tradfi firms approach somebody like 11FS, what is their primary motivation to pick up that phone call? Is it fear, or is it curiosity, or is it something in between?
Okay, so I think extremes help to exemplify, and what I'm going to say now has no resemblance to any of the clients' interactions that I'm having. But I think that if you are a financial services company and you're not doing anything towards crypto or blockchain, there's a big chance that you're not going to exist in between 5 to 10 years.
Wow.
So this is an extreme opinion, but I think, and the good part is most of the serious financial services company are exploring things, right? Because not only they see this as, again, an infrastructure, a new financial infrastructure that is here already. We just don't know what to do with it 100%. But there is a very keen section of their clients that are asking about it. If you can take a look at any like headlines of 2021. Most banks had headlines saying, "Yeah, we're looking into this because there's client demand." And this is one of the most beautiful things about blockchain in general, is that it works based on incentives from the base protocol, meaning the very raw technology where you have validators, miners, etc., that are ingrained into the very infrastructure or validating each transaction on the blockchain through these incentives, to the application layer where, well, we want to see what's in it for us, which is an interest at first, but what they're looking for is, what are the incentives for me to join this new economy? So I think our role in accelerating this is, one, trying to bridge these unlocks. So UX, education, information, and the regulatory integration, which I think are the three main pillars to unlock all of this economy and bridge Tradfi into DeFi. But also have these players that have a huge client base. They have huge balance sheets with client money that they are managing. If you think about this, right now in the equities market, we have around $100 trillion in terms of total value. In DeFi, we use a metric called TVL, which is total value locked, which means how much money I have in deposits in DeFi. And it's around $250 billion. So it's almost 4 times the industry in equity that is traditional money than what we have currently today in DeFi. So if I pull in 1% of the traditional finance, we grow DeFi 4 times. So the possibilities of growing this industry by moving this traditional money into this new modern form of money is huge. I mean, the upside is huge. So that's why people say we're early, is because there's still money that's tied up in the old forms of investment, that once we start tapping in and flowing that into this new industry, we're going to see a huge multiplier. And we're going to see, as I mentioned earlier, a huge chunk of efficiency with that money. So there is a huge upside. Of course, everything comes with risks, because most of this is new and most of this, the consequences of this are unknown. But because the innovation experimentation that's going into space is so huge, I think we're going to start to see clear winners in terms of maturity, in terms of sustainability, in terms of even how things get structured for and by the regulators. So when people say, oh, there's a lot of scam, there's a lot of Ponzi scheme in the crypto space, that's because we're really early. And the more we out these cases, the cleaner the industry becomes. So I'm eager to see all of the scammers all at once, and then clean the industry from them and really go and do these things in all seriousness that they require, which is this is a new form of financial infrastructure. Let's tackle this for what it is.
Wow. Let's wrap it up there, Mauricio. But I really appreciate your time and your insights on it, and certainly plenty to chew and mull over and split off into future podcasts. One last question for you, completely off topic. What type of music does your band play? You look like a rock and roll man compared to a classical violinist.
So yeah, I'm currently involved in 3 bands. Actually, I have one band that's 25 years old. It's Versover. We started off before I even went to college, and we're still on. This is more of a heavy prog type band. I am also part of Viejos Insanos, which is like a classic rock type of band. So we do a bunch of covers. Versover is all original material. Viejos Insanos is more like trying to play the classics. And I recently joined another project, yet unnamed, where I play drums, and I also play drums, and we're doing more of extreme type death metal, thrash metal type thing, which is a little bit more extreme, a language that I'm still kind of learning musically. But yeah, music is all fun. I love it.
A word away from the day job.
Yeah, I mean, we'll rock and roll in crypto as well. That's fine.
Very good. So thank you again for your time, Mauricio, and I'm sure we'll catch up again. And thank you, podcasters, for tuning in for this episode of the Aquest Podcast.
The Aquest Podcast, Funds Industry Conversations.